All right, welcome to the daily market recap for Monday, September 15th. In this video, we'll be taking a look at the action today of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the market open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments. Getting into the indexes first, we'll start with QQQ, the NASDAQ. Another gap up, open on the low, close near the high of the day, up 0.86%. We are definitely in the acceleration portion of this trend, and we're in a momentum market. I would not want to be trying to short stocks just yet. We're going to have plenty of time to short when momentum snaps. We close under the 5-day moving average, and we see an acceleration to the downside, but we're not in that market. We've got a lot of strength just kind of across the market right now. Uh, I I've made this mistake in the past, even though things are stretched to the upside. If you look back at previous acceleration periods in the market, you can look at the end of August, beginning of September of 2020. The price action, like the moves at the tail end of these acceleration periods, are very drastic. And if you're a day or two early shorting positions, you're going to get your face ripped off and then probably have less capital to short on the way down. So for the time being, the market is up, the trend is up. Many stocks and themes are making new all-time highs. Just stick with the side of the momentum. S&P 500, another gap up, closed near the high of the day, up 0.5%. Same kind of structure here, except a little bit stronger because we had lower positioning in the S&P 500 versus the Nasdaq. A lot of people are heavily long the Nasdaq. Overall, hot data is short the S&P 500, so that's a little surprising and probably why this trend can continue longer than you expect. Um, but really smooth price action out of the S&P 500. The growth stocks of the Russell 2000, that's IWO, inside candle over the last 2 days. Tested the upper resistance gap, failed there, but did have a gap up today. So kind of 2 days of consolidating over a rising 5-day EMA. Usually good sign for continuation higher. ARKK, gap up, closed near the high of the day, up another 1.4%. And this is another just like really quality chart and what I use for like a risk on indicator. Whenever this is over the rising 20-day EMA, that's usually a good sign for trading growth stocks to the long side. And we just put in a really quality 5 or 6 weeks of consolidation, letting that 10-day or 10-week 50-day moving average catch up. And now we've pushed off from there. Then IBIT to track Bitcoin. A little bit of weakness today after some strength last Friday. Right back to the 50-day moving average. Now just looking for a higher low to be placed in here, and then we can hopefully continue to trend higher. Next to the liquid leaders, we'll sort this by price percent change today, and Google stole the show. Big gap up, open on the high, or sorry, open on the low, close near the high of the day, up another 4.5% on a big pickup in volume, basically going vertical at this point. Alibaba up another 2% with a gap up. Because it's a Chinese stock and it trades on other exchanges, you're going to have plenty of gaps in the chart. Not worth me drawing them, not worth really looking at them, but uh, facts are there. Baba breaking out of a multi-year base after earnings, had a secondary that got soaked up right away and resolved higher. We'll touch base on the Chinese internet ETF later, but if you've watched my recaps, you know that's an emerging theme that I'm focused on. APP, higher highs, higher lows, up another 1.9%. Rocket Lab, pretty tight consolidation day, still making new highs, but not expanding higher, up another 1.3%. CLS, little undercut of the 5-day EMA on Friday, then higher highs, higher lows today, recapturing that 5-day moving average, closing well on an uptick in volume. That was up 2% today. Whoops. Next, we have AVGO, touched off the 5-day moving average, closed well, not doing anything wrong there. CRDO, similar story, just consolidating while the 5-day moving average catches up, perfectly healthy. ALAB, I really like the way that this is setting up. Like 3 really tight days over the 5-day moving average, volume declining, from contraction comes expansion in one direction or the other, but we're in a momentum market to the upside. So my expectation is that this does resolve higher. And then BE, which has probably been the strongest stock the last, I don't know, 2 months in the market, continues to just chop higher. Another test of the 5-day moving average and support gap, the high point of that support gap. And then we close slightly down for the day, down 0.3%, but buyers are stepping in on any dip in this stock. So until we can close under that support gap, under the 5-day moving average, the trend is higher on this name. Getting into some of the industry ETFs, the big theme today was nuclear and uranium stocks. NLR up 6.9%. Huge, huge volume coming in. Nice, strong close. We had moves out of Oklo up, what was that, 15.7%. UUUU up 15%. CCJ was up 10.5%. NNE up 13%. SMR was up 7.7%. What are some other nuclear or uranium stocks? Let's see. UUU, NXE up 10%, LEU up 9.8%. So tons of strength within that group. And another group that kind of went through a double bottom base, had tight price action, or put in some higher lows, shake out here, then got nice and tight and expanded to the upside. XME, metal and mining ETF, another gap up, another strong close on massive volume, really just a runaway trend. And you look through a bunch of these charts and you just see acceleration and parabolic moves across the market, which again, if you're in the market and you're playing on the long side, this is exactly the market that you want to take advantage of. I want people to understand that that's a good thing. Like you want to be in momentum markets, but when momentum markets do snap, that acceleration to the upside tends to be very quick to the downside as well. So just keep in mind where you're starting new positions at, and you're not like FOMOing in right here with no stops, because eventually we are going to have a pretty nasty shakeout, and you don't want to FOMO in right at the top. Some other signs, GDX, just a frozen rope on that 5-day moving average, up another 1%. Cybersecurity, good strength, gap up over the 5-day moving average, closed well. Same with IGV, another gap up, really working on the right side of the base here. Semiconductors made a new all-time high, closing at the high of the day. KWEB, Chinese Internet ETF, broke out of a 3.5-year base last week, and we followed through a little bit to the upside today. XBI, a little bit of weakness, closed under a support gap, under the 10-day moving average, but wick down here. Because the 200-day is just flattening out now, I do expect like volatility in this name. It's a position I currently have with LABU from down here. So really, like, you have to build your expectations with the positions that you're going to be taking. My expectations is we're going to still see a lot of volatility until that 200-day gets into a clean uptrend. So although the price action the last 2 days were a little disappointing, it's not the end of the world. Um, and then MSOS, cannabis ETF continues lower, down 3%. We'll touch on ITB in the long setup portion of the video. So getting to the long setups, we'll do it most liquid to least liquid based on the 20-day dollar volume. First is BMNR, and going back to it, we are in a momentum market. This is very much a kind of performance boosting play. Uh, had a insane move from $4 up to $160, fell all the way back down to 30, rallied up to 69, pulled back to 41. So now we're seeing volatility contract, contract, contract. Good move on Friday up 15%. And then today, respected like relative to BMNR's move, really tight price action, only down 3.8%, closed up in the daily range. And we would just be looking for a break over today's high as potential entry. Stop at the 5-day moving average on this one. NBIS still kind of working through that secondary offering after the huge gap up where it finished up 49% on September 9th. Pulled into the 5-day EMA, higher highs, higher lows, but basically closed flat today. Would be looking for like another test of the 5-day. pull back into this area and then manage risk against Friday's low. Really, really tight price action or really tight risk on a name like this. It either undercuts the 5 day and then immediately works, or this needs more consolidation and maybe a whole nother base before it can go higher. ALAB kind of touched on this in the leaders list. If you're like a day trader or like a really short-term swing trader, this type of price action usually does lead higher, especially in the market that we're in right now. So if I was looking at this as like a day trade or a swing trade, I think through today's high is a perfectly fine buy point. Stop would be like today's low. As more of a swing trader and where I want to be buying more like shakeouts, a pullback into the 10-day moving average in the gap zone at 214 is going to be the spot that I'm more focused on. SOUN, this was on the watch list coming into the day. We've just had multiple higher lows over that 50-day moving average. You've got the 200-day in an uptrend. You've got the right order of the moving averages and just a nice big base here. I didn't take this going through today's or Friday's high. You could have. That was a potential entry. There's still a lot of volatility here, but um, overall, when we make a move like this, the stock can either follow through the downside, in which case we don't want to trade it, or a squat like this can shake out people and then make them less or more hesitant to buy as it comes back through that zone. So, with the market strength in mind, the momentum market, I would just be looking through Friday's high again, that 1465 area, and then manage my risk against whatever the low of the day is. TEM made an awesome move on Thursday last week, up 13%, closing above a resistance gap and a new all-time closing high. No, not quite, about a percent off. Since then, two low volume days pull back into the 5 day moving average. Looking for an opening range, a gap up opening range break as a potential buy, or a shakeout of today's low of the 5 day moving average. Then a recapture of today's low is the entry point. MP, this had been a momentum mover up $18 to $80. First test of the 50-day moving average, and we had a slight gap up today. Uh, didn't like close kind of mid-range, not super strong, right into that 20-day EMA. Looking for a undercut of today's gap of the 50-day moving average as a higher low in this kind of pullback area. Then manage my risk against the low of the pullback. RKT, a lot of home builders have been working really well. Home builder adjacent name. Um, Lots of volatility up here, so I don't want to be buying on strength when the last 4 days we've seen increased volatility without price appreciation. So a couple different pullback spots to watch. Over the next couple days, I think the 10-day moving average could catch up to the gap zone at 2050. That would be a like shorter term spot I would be watching for. Otherwise, in the next like week or so, if the market comes under pressure, the rising 20-day EMA and support gap, that would be kind of like a breakout retest and a higher low overall, right around 19, like 20, 1930 as a potential entry. FUTU, I tried adding to my position today on this on the undercut and reclaim of Friday's low, the 20-day EMA. And then I had my stop at the low of this pullback. Got stopped out on that addition. It closed okay, pretty weak in the range compared to the Nasdaq, but this is just consolidating. If I zoom out, right below all-time highs, so I don't want to ignore it because this is really like we've had a couple touches of the 20-day EMA. Maybe it needs time to let the 50-day catch up and have like a first test of the 50-day. But I still think with foreign stocks like really starting to work well, and this already showed the ability to make really clean moves, basically a double off of April's low. Looking for a gap up opening range break to play versus today's low as the ad spot for me. AEO, got back through the 5 day moving average and the HVC today on a pickup in volume. Now just looking for a retest of that HVC, the high volume close area, and the 5 day moving average. Stop would be the 10-day moving average and today's low. And then home builders as a whole, ITB has made an awesome move off the low here. You can see the massive accumulation volume bars on the way up And then we've seen volume drop off here as the stock got extended or the theme got extended in the short term, which is good overall. We don't want to buy anything that's extended. We want to buy things that are pulling back to key moving averages. And this is pulling back to the 20-day EMA for the first time since it got over the 200-day. So whenever you have something pulling back to the 20-day for the first time after making new highs in the range, and it comes back to a support gap, that's a spot that I'm laser focused on. So an undercut and reclaim of that area is the buy point. I'll probably use NAIL, which is the triple leverage version of ITB. But you always want to do technical analysis on the underlying asset, not the leveraged ETF, which is why we're going over ITB in this video. AAOI, kind of the one that got away from me. Not going to be chasing it higher, waiting for a pullback into the gap zone. By the time it does that, the 10-day would probably have caught up. So that's like a good retest of that area. Not going to be chasing it up here, but I kind of think that this does just go higher without me. But that's okay. You can't trade every name. GDS, another Chinese equity stock, big kind of, I don't know what you want to call it, cup and handle. I would just call it a consolidation. Like we have big move down from 52 down to 18, rally back up to the 40s, higher low, big push last Thursday up 15%. And then similar to like TEM, pulling back into the 5-day EMA on declining volume, still a little bit higher volume than I would like. So one more day, like pulling back and tightening up on volume would improve the setup quite a bit. But through today's high, stop at the 5-day moving average. You have the Chinese theme working, would be a potential play. It does only trade $100 million a day, so size it a little bit lower. METC, first close under the 20-day EMA on Thursday, followed through on Friday. Well, basically closed flat, but a secondary close under the 20-day. And then we had a gap up, open on the low, close on the high today. Just looking for a retest of that gap zone, 2430 as a potential entry. And then last one, LASR. This is kind of similar to SOUN, where we had a move up through the pivot that I was watching for, and then we squatted and closed below that, but we haven't fallen. Like we closed better here than SOUN, so this is a little bit more of a focus than that name. But I would just be looking for another pivot breakout, like back over 30 after a squat like this in a market that we're in currently is usually a good sign. So if it can get back through 30 instead of following through the downside, that would be the entry. The stop, I would put at either the low of the day or the low of today. Low of today would get you about 3% risk, so that's tight enough for that trade. And then, oh, I did have some shorts. Deleted a couple of these, so I don't know why they're showing. Let me get them off the screen. Sorry about that. So, like I said before, we're in a momentum market. There's so many stocks breaking out on big volume, moving higher. There's going to be plenty of time to short stocks when momentum snaps. You don't have to get all of your shorting done on one day, and you want to play momentum while it's there to the upside. So, even though I have some short setups here, until I see any of these setups actually follow through to the downside, I'm not going to be really looking to short much. First one is Joby. Once again, a failure at that same resistance gap that we saw on Friday after the gap up. We did close positive today, up 0.9%, but right near the low of that range. A little gap up tomorrow and then follow through today's low would be the short entry. Stop over the 20-day EMA. Keep the risk nice and tight on that because, again, the market that we're in, if you're short and it starts to work against you, you got to get out right away. Next, we have CAR, Avis Budget. Big gap down on earnings. What was this down? 15%. And really has gone nowhere since. Started following through the downside today. We're just looking for a little rally back up into that 5 and the 10-day moving average around 155. And then the stop would be over the 20-day EMA at like 159-ish. SEZL, Another name that gapped down on earnings was down about 34%. Since then, has just traded sideways while the market's gone basically straight up. So some relative weakness comparatively. And now we're just looking for, again, a move through today's low, stop at today's high, and see if this actually has even more room to the downside, maybe meet up with the 200-day moving average. ZEPP, you could flip a coin on this one, and I would not argue if you want to take this long. I think it's probably a really quality long setup. The only thing is it only trades $20 million a day. So like sizing wise, you have to be really careful with this, both on the long side and the short side. But this is a stock that's already made its move from $2 up to $52, 26x in just a couple months. Now we've consolidated for about 2 weeks. We closed right at the 10-day moving average with a secondary gap down zone. The first gap down, we uppercut 3 different times and failed at that area. So now we're getting a lot of trading between this like 46 to 53 range. Would only short this on weakness. I don't want to short this on strength. So through today's low is the short. Stop would be today's closing price. I would keep it pretty tight. And then if you want to take this long through today's high, this probably does get another move higher before it eventually tops out, just because the market that we're in. And then MSTR, I think with Bitcoin strength, with kind of a speculative market, and with all of these lower wicks where buyers are absorbing the price here, I think we do kind of rally a little bit longer than we would expect before a quality short entry shows up. I still have a, what is it, 8% position short on MSTR from August 13th, um, that I want to add to, but at the right point when momentum breaks in the market. So I'll be watching for this resistance gap high at 335, but more realistically, like an uppercut of the 20-day EMA and failure is a potential entry. But I think like the A plus short spot would be a test of the 200-day and the resistance gap at 355. It might take a couple days to get there, but that would be a spot where I would try to size up pretty substantially, because at that point, Bitcoin would have had to rally for 3, 4 days. The market, another 3, 4 days of momentum, really getting stretched to the upside. At some point, momentum is going to dry up, and that would give us a really, really nice risk reward spot. So that's going to be the daily market recap for Monday, September 15th. If you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments. Have a great night, and I'll see you guys in tomorrow's video.